Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about 9 Dragons Paper Holdings Limited interim report. 9 Dragons Paper Holdings Limited offers a diverse range of businesses and services, primarily focused on paper manufacturing and sales. The company provides various types of packaging paper, including kraft, test, white top, and coated linerboard, as well as bleached folding boxboard. In addition to packaging paper, 9 Dragons Paper also manufactures corrugating medium, uncoated wood-free and office paper, coated duplex board, and gypsum board cover paper. The company's product line extends to container board, kraft paper, and packaging products, such as corrugated sheet, cardboard, and carton box. Furthermore, the company offers specialized services like color printing and laminated paper products. Its range of products also includes kraft paper bags, making it a one-stop shop for various paper-based needs. With its extensive product portfolio, 9 Dragons Paper Holdings Limited has established itself as a leading player in the Chinese paper industry. 9 Dragons Paper Holdings Limited market capitalization of $34 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that 9 Dragons Paper Holdings Limited holds a significant advantage in their industry. 9 Dragons Paper Holdings Limited trades at a higher price-to-earnings ratio of 17 times and a higher price-to-book ratio of 0.61 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price to value than it appears. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap. The leverage on the balance sheet appears elevated, with liabilities of 65% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The net income of the company experienced significant growth, with an increase of 225.1% to approximately RMB 211.7 million. This substantial rise in net income was also reflected in other periods, with a 318.8% increase to approximately RMB 966.5 million and a 113.4% increase compared to the previous period. The improvement in profit margins can be attributed to several factors. Firstly, strong sales volume and price growth contributed significantly to the increase in profit margins. Additionally, the company optimized its profit structure through production capacity increases and quality upgrades. This optimization led to an increase in gross profit margin from 9.5% to 14.4%. Furthermore, operating profit as a percentage of revenue increased from 3.7% to 4.3% for selling and distribution costs. These changes collectively resulted in improved profit margins for the company. The company's ability to generate positive operating cash flow has been a subject of mixed signals. On one hand, there are instances where the company has indeed generated positive operating cash flow, as seen on pages 24 and 54, with a projection of achieving this milestone by 2025. However, other pages reveal conflicting information, including an inference of generating positive cash flow without direct evidence, page 18, a clear indication of not doing so, page 23, and even a negative operating cash flow, page 43. This inconsistency raises questions about the company's financial health and its ability to sustain positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past period. In terms of total borrowings, there is a mixed trend. Initially, it increased from RMB 68,000 318.9 million to RMB 73,466.9 million. However, this was followed by a decrease of RMB 277,297. Furthermore, as of December 31, 2025, the total borrowing stood at RMB 75,418,439. Non-current liabilities also saw an increase of RMB 2,139,293. On the other hand, current liabilities decreased by RMB 4,177,641. Regarding interest expenses, finance costs rose from RMB 771.7 million to RMB 808.3 million. Interestingly, interest expense actually decreased from RMB 1,123,946 to RMB 1,121,655. The company's dividend policy has been conservative, with no direct payment of dividends to shareholders. However, it has found alternative ways to return value to its investors through other means. One such example is the distribution made to holders of perpetual capital securities, which amounts to RM 199,281,000, or approximately US $28 million. This indirect share buyback demonstrates the company's commitment to rewarding its investors and providing a return on their investment. Concerns have been raised regarding inventory buildup and supply chain disruption in certain sections of the report. Specifically, pages 53 and 65 highlight increased raw materials and finished goods inventories, as well as a significant decrease in changes to finished goods, which may indicate potential issues with inventory levels. However, these concerns are not consistently echoed throughout the report. In fact, several other pages suggest that there is no cause for alarm regarding inventory buildup or supply chain disruption. This inconsistency raises questions about the overall state of inventory management and supply chains within the organization. That concludes the financial summary for 9 Dragons Paper Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.